Hello everyone, good afternoon and welcome to today's Trading the US Open live here at the Live Trade Room. And today is Wednesday the 26th of September. What we look to do during this session is to look for, ordinarily look for high probability trading opportunities where we can execute with discipline and consistency in our approach. With a view to manage our trades by looking to cut our losers short but letting our winners run when we get those opportunities, when they do arise, with one aim, and that is to book in consistent returns when we trade. Now today is Wednesday the 26th of September, so it's there's a number of major news events later on in the trading day, so I will draw your attention to those events very shortly. And we might have a slightly different sort of view on this particular trading session as a result. I'll explain what I mean very, very shortly, but firstly, please do familiarize yourselves with the risks involved in trading these markets and take note of our risk warning currently up on screen. Okay, so before we begin, it's important to, like I said, have an understanding of the news flow and what you want to make sure you do when you trade these markets is that you are mindful of any potential news events that could impact your trading, perhaps trades that you're currently in or trades that you're about to take. So as we look at these markets then, we don't have any significant events occurring over the course of the day until we get to the crude oil inventories at 3:30 p.m. and all of these times are UK times, just for your information, and it's expected to be another negative figure. Minus 0.7. So the recent prints have kind of contributed towards the push in the oil prices to the upside over the last 6 weeks, let's say. They've all produced negative numbers. We're due another negative number, and you'd expect if we did see continuation that we would see the price of oil pushing higher. Now there is concern regarding the impact that the price of oil can have on things like inflation and monetary policy and accommodation and interest rates and all of those sorts of reasons. I suppose the price of oil formulates a significant part of that conversation. So it is important to have an eye on the oil markets. We are running into significant resistance, so we'll have a look at these markets pretty shortly, but the major news for event, we have a couple of central bank events occurring this evening. The major event is at 7 p.m. UK time, which is the FOMC statement and fund rate. So we're actually overwhelmingly expecting a positive increase in the funds rate from 2% to 2.25. So obviously that's a 25 basis point increase to the upside. That is quite significant. We're obviously in this rate increasing environment at the moment. So it's another leg to the upside for the Fed. There's something like 94% in favor of the markets are certainly have already priced in a rate increase of 25 basis points. So that's not necessarily what is going to provide the volatility this evening. It's more around what will come next. So there is the expectation in the December FOMC for rates to increase another 25%, quite significant expectation for that to happen. So that's firmly kind of priced in. It'll be interesting to see if the market delivers on that. You would imagine it probably would, just because there's a couple of aspects of sort of the global financial markets are there's signs of kind of global strength, which is good, but it's quite fragile and a little bit on the brittle side. So I suppose these central banks need to continue to be very careful about the decisions that they make. So the Fed are leading the way, obviously, with increasing rates. We've come from a ridiculously low sort of basis, really, where obviously with the financial crash, one of the weapons that the Fed used to try and stabilize things was a rapid decrease in interest rates from around 5% very quickly to down close to 0% and just hovering above that 0% levy. And as you can see, over the last couple of years, we've been on this steady growth to the upside, and we're expecting another step to the upside. You can see every 2 meetings we're getting a bit of a move to the upside, and again that's likely to continue in December. So this is the steady increase of rates. That's the environment, and that's why it's likely to provide a lot of volatility and hopefully a little bit more direction for the dollar, whether it strengthens or whether it weakens. So we will very carefully look at this event. For our traders over at the Live Trade Room, we'll be posting about the events through our private Facebook page. And in addition to the Fed, actually, we also have another rate announcement impacting the New Zealand dollar, the RBNZ. They're expected to keep interest rates at 1.75. So globally, interest rates are remarkably low, with the potential for these interest rates to increase. So again, we've got back-to-back central banks making pretty significant decisions regarding interest rates this evening. So as a result, and the reason why I wanted to just sort of touch upon it in a little bit more detail is that as a result, we're very likely to see markets which are a little bit lacking direction or any significant movement. We're likely to see, we were very interested to try to see this morning whether we would get any sort of moves that would sort of be a build up to sorry, let me try that again. So sorry, I was just putting that together there. So we were hoping for some clear-cut direction, and even when we got this breakout, this is the euro dollar. So we briefly the other day, 2 days ago, we edged above the 1800, but we had a really strong rejection of that level. And the level to the downside is the 1727, and we're not too far away from breaking that level. So this might be the sort of FOMC move, or the preparation for the dollar to start strengthening. So we can keep a close eye on this. We are also anticipating potentially the dollar to strengthen against the pound, but as you can see, that hasn't materialized either, even though we did get a little bit of an extension to the downside. But so these are the market conditions. We were looking at the yen potentially strengthening in the build up to the FOMC, but then the dollar has kind of strengthened instead, which is fine. But we do have these levels of resistance in and around these levels. So a strong rejection to the downside. That's why we were sort of looking for a break beneath yesterday's low. That would have given us a higher degree of confirmation that we would need, especially in these market conditions, which are quite choppy. So we're seeing a bit of strength just roll into these markets pre FOMC. Not much in the dollar CAD as of yet. The Aussie dollar is potentially looking like it's going to roll over to the downside. So we do like the Aussie and the New Zealand lower, and maybe that might give us an opportunity. But I mean, just looking at the price action over the course of this week, it's awful, really. And I suppose the Aussie dollar is a kind of a good example. Moving on to a market which we were potentially suggesting that might strengthen from this level has actually completely rolled over to the downside. So I suppose stepping back from this market was obviously a good idea in hindsight. And I'll just share with you the kind of the very erratic, very choppy price action. So really, this is a market that we're not overly comfortable trading. Every time there's a statement made in the markets, you get this strong movement either to the upside or to the downside, and we're just getting another continued move lower. So let me zoom out so you can see what's truly happening with this market. And we've long been advocates of this market selling off, but it's been selling off in a very sort of turbulent manner, as you can see. So we are still squeezing lower. We've broken out of this trend, and over the longer term we're still in this sideways moving market. So we do like this market to the downside, but we're very nervous about obviously the pound and how it's reacting with regards to these Brexit negotiations. Pound yen, we were looking at the pound yen and the euro yen for the break beneath this level, and we're getting obviously mixed pictures because the euro has been selling off, the pound has been strengthening. So again, kind of mixed messages. It just means that the dollar is firmly between the euro and the pound as things stand right now, but of course those things could change drastically. So this is a market which is fundamentally moving sideways. There's no clear direction. Now with some strength coming into the US dollar, we might see this market roll over, and if it does below the 11.96, it might give us just a short-term move further to the downside. So this might be a market looking at in the build up to the FOMC. So we'll come back to that. In fact, I'll just monitor this this level as things stand. So we're just in and around that level. The US oil is just selling off these highs. This is an important level to us, and we're getting a bit of a pullback in the US oil market. Not much is happening in US equities. We do like to look at multi-asset class. We don't want to literally just focus on the foreign exchange. Sometimes you can get some really good opportunities. I mean, it just so happens now those opportunities are not great, but these are probably the 18 of the most liquid markets in the world. So it's important to have an understanding about these specific markets. An interesting opportunity could be with a little bit of selling coming in to the price of oil. So it's just bouncing off this level here. For most of the day, we really struggled to break above the 72.52, and maybe now we're going to get a little bit of a rollover to the downside. So maybe it's giving us a little opportunity to see if we get a bit of a sell to the downside in this market. So as a result, we'll have a look at the oil market. We'll have a look at the gold market. Not overly interested anymore in the euro, in the yen related markets, so we can certainly discount these markets just for now. The euro pound is extending lower. The Aussie dollar, we do like the idea of the Aussie dollar weakening, but it's been really erratic, and we would need this price to break below the 72.35 for us to get into it with any degree of consistency in our approach, which is what we're looking to do. And it definitely feels like there's strength creeping into this dollar. So there was a marginal move just lower, just a few pips lower. So really the 17.26 could be the level that we might look to get into this market to the downside. So let's go and have a look at this to the downside. So we're getting the really strong run up to this level. So if the pound is strengthening a little bit as the dollar, and the dollar is quite strong against the euro, so actually it might be worth looking at the euro pound. So this time to the downside. So there's our initial move lower, sideways moving, a little bit of a bounce back. And what we can do is we can work with this sort of downward range in this market. So maybe a pullback off this kind of lower level down here, maybe somewhere around the 89.20 could be the opportunity for us to take this market to the downside. And these are all moves that are sort of pre-FOMC. Sometimes you get markets moving like this, sometimes you don't. I was fully expecting a little bit of a quiet session, but again, just prior to the US Open, we're getting a couple of explosive moves. So these two markets are obviously correlated. They share the euro and the potential strength in the euro market. Oops, excuse me. So we can look at this market just sitting in here, which is the euro dollar. Euro dollar to the downside, and in fact the euro pound and the euro dollar to the downside. So really we're wanting, I mean, you can see it quite clearly here on screen. Now the move would be below the 1724. Now we do have this level up here, and this market has extended a significant distance already by the time it gets to that level. So if we do get a break, we're likely to get a little bit of a snapback, and maybe we look to get in on the pullback wherever that level may exist. But what we're looking to do is to sell this market below the 1724. So I might just leave this level just where it is, and it's a similar trade really. I'll just zoom out there, and we're seeing this market extend to the downside. So really we've got the move, and this is what I was just saying, like if we can identify this strong run up, which is exactly what we want to see, we get the break below a level of support. So this is the break in here. We've got a lot of momentum to the downside. We've made a new low around the 8900, and now we potentially look to capitalize on the pullback. So this just has a number of elements going for it. So if I go back to our screen just like this, so we can just see this level over here. I might zoom in a little bit more. So I'm afraid I might have to stick with this. But the same kind of trade applies really. We're looking for a sell trade below the 1724. If we get that in the euro dollar, we'd be eager to get into that to the downside, and we'll see how price behaves around these levels. And a pullback trade, if we get an opportunity somewhere in and around this level here, then we'll see if we can, again, just purely on support and resistance, we might look to sell from the 89.20 level to the downside. So we're not too far away. A little bit of a pullback in this market, but we're looking for this this sell trade, pushing prices lower. In addition to this, let me show you what else we're looking at. Which is this level in here for the gold market. Let's zoom out. So we are currently getting that little bit of an extra move below this level. So that has now occurred. So there's a lot of resistance around these kind of just lower levels down here. Let me take this off screen so you can. So quite choppy, really, isn't it? But we would look for opportunities to see if we capitalize on a pullback in and around the 190, the 1196. If we get a pullback in this market, we'll look to take it. So we've just experienced this little breakout to the downside, quite an explosive move. And I wonder if we've seen the same from the oil market. We'll just bring the oil market down to the bottom right hand corner of the screen. So yes, we're now below this structural handle in here. We've actually now closed below that level, so that's a little bit more important. So if it bounces back to the 7200 level, could give us a good opportunity to sell this market. So actually now, and these moves could all be pre-FOMC, potentially a couple of interesting moves are actually beginning to line up for us, which I don't think I've said that for a little while. So that is the good news. Let me take all these away. So let me share our trading plan for the session. We're looking to sell this market, the euro dollar, below the 1724. We're looking to, I'll just put a little square in here just to differentiate the region in which we'd be interested in selling this market. To the downside, our level is firmly the 1196. As you can see, we're kind of extending lower, so we would want to try to capitalize on a pullback trade to the downside in and around this price in here. And the same exists. It's kind of the pullback to that kind of level there to get this market pushing lower. Somewhere in and around this area for these two markets. And if we get that, and the same really applies for this market, for the euro pound. So let's just change that analysis as the pullback trade for the next leg to the downside, and we're looking for this market to come back somewhere inside that range, or getting close to the 89.20 level. We're only a few pips away from that now, so that could give us a really good opportunity fairly shortly. So nice to see a couple of potential opportunities now in the pipeline. Let's see how we get on with these. I can see that the euro pound is just coming back to that level. So let's look at this on a daily time frame. So when we get these little pullbacks, we want to see a bit of a turnaround price action in this market for us. We're not too far away from the same level in the euro dollar. We're just looking at these levels down here, the 1724. We're only 10 pips away from that, and we've already experienced a bit of an explosive move, a fairly quick and concise sort of 3-minute move from the 1196 down to the 1195. So quite a quick explosive move there. We do have this other level, so the momentum's clearly coming into the downside. we would just, for consistency purposes, we'd like to get involved in the pullback and not really get involved in selling these markets at these lower levels. And the problem with that, of course, is that the market can just continue to fly against you. But either way, any kind of pullback in that market, you know, we can look to take that to the downside. It's looking quite good on the daily time frame. And we just want to see what's going to happen with this price action around this level here. If we get a structural failure or we get a little bit of a rollover to the downside, then we might look to sell somewhere in and around this kind of level. So the pound has really gone from quite weak this morning to potentially looking quite strong this afternoon. So now we just need to be a little bit patient and see if we get those opportunities. Another level just looked like it's beginning to set up is the oil level. So I just want to look at it on a 5-minute time frame. Just currently a pullback, which is what we'd like to see. Let's see the best level for this pullback. It's firmly around the 7,200 level, so let's go back in on a smaller time frame. So we're at that level now, 7,200, and any opportunity to sell this market at this price, we might look to get into it. What we like at these levels of resistance is what's called a structural failure, where the market just attempts to make a new high and that fails, and then we get the move to the downside. Again, we haven't had very many of those opportunities really over the last couple of weeks, but obviously we want to be and practice consistency in our approach as often as possible. So you know, what we want to make sure that we don't do, and certainly it's a little bit of a tip. Market conditions ebb and flow; they go through different phases all the time. What's important for us as traders is to not start meddling and changing our approach, because as soon as you do, you might find that the market conditions change again. So instead of that, adopting that process, do please consider just taking on board the market conditions and adapting your approach to risk. So take the same type of trades, but reduce down your risk levels. So if you know that the markets are quite choppy and they're quite there's a lack of direction, then change the amount of risk. So you can still look for the same type of trades, but reduce down the risk. And then when the markets start to improve and you start getting easier, more clear-cut opportunities, you can then increase the risk, and you can benefit when the market conditions change to your trading style, and not you keep changing to the market conditions, because they do go through periods of tight price action, erratic kind of moves, especially with geopolitical events which are currently going on. And if you're a technical trader and you trade momentum, if you trade the trend or the overriding trend, you obviously need direction, and when you don't get that direction, you know, the markets can just stifle you a little bit. But it's much better to continue to practice and just focus on things like being consistent with your approach, being extra patient during more difficult market conditions, and look to reduce down that risk, and wait for the conditions to improve, because they will, they always do, and things can change very, very quickly as well, which is another important facet to consider. So we've got an opportunity to get into the oil market now to the downside. and it would be a relatively small stop loss as well. So with both of these markets, as we look at the euro, if we get this little move where we make a new high and we break below this level, we can put our stop loss just above here, and we can hopefully capitalize on a move lower. The same thing applies if we just get a little movement lower before we take that low. Then that would be preferable. So we're looking for similar kind of setups in both markets. Okay, so now it just becomes a sort of a bit of a waiting game to just see if you can get the conditions that you would like to trade. And certainly take a note of this low in here. It's very, very shallow. It's not even a pullback really, but we are below the 20 level, which is another level of resistance. And if we get a break lower in both of these markets, if we get a break below the 90, the 71.95, or the 89.16 level, so this is a little bit better now for us. I'm just watching the gold market as well, and it's looking like it's just wanting to continue lower on the 15-minute time frame. Now we're running into other considerations now. We've got a lot of these lows just sitting at these levels. That's why we're looking to get in at the 11.96. No real significant opportunity to get in at this level either. Maybe, I mean, by the time we got the close of this market, we've reversed 50%. So again, that doesn't conform with our trades, but it definitely looks like there's some strength coming into the US dollar, and we are getting a little bit of this move. And it might be worth getting in on this structural failure on the 1-minute time frame. Just see if we can get into this market. So let's get into the US oil market to the downside. I'll just amend that stop loss just again shortly. Okay, so an 18 pip stop loss in the gold market. Let's see if we get this market swinging lower. You see, we didn't get a close below the 194.36 level, so until we do, we might not be able to get into the gold market just yet. Plus, we are getting into it a little bit lower than anticipated, so do bear that in mind if we do get into that trade. We attempted to get a little bit of a close below that level in the gold market, so it's still important we get a close below that 1194.36, and we're getting close to potentially getting a close below the 85.16. This could be a nice short small stop loss as well on the euro pound. See, our mindset really is not about giving room for these trades. It's really to expect a certain outcome, and if you don't see that outcome fairly quickly, our approach is certainly we want to get out of it. If it's performing in a way in which we're not comfortable, we'd rather get out of that trade. So let's see if we get a little close. So now we've got the close, and we can get ready for. So we've got getting a little bit of a pullback on that. So let's see if we get this little impulse lower in this market, in which case we can get into it. What we hope we get the opportunity to do with the US oil market is, so we can get into this trade now, we can just sell it at this level. We've got a pretty tight stop loss. So just a little bit above the 20 level. So we've only got a really small stop loss again on this market, and this is very much a we want the 89.20 to hold. So and if this market doesn't hold, we almost don't really want to be in it. It's a kind of a strong level where we're getting on a pullback and extending the market to the downside. So it's a fairly straightforward sort of trade idea, and with the expectation of at least this market pushing down to its lows down here at the 89.07, and then that just gives us a good positive risk reward just getting to these lows, with the expectation that this market can move lower. So it's just a pullback trade to an important level of support and resistance. That's the trade we're looking to take, and let's see if we get a bit of a move in that market or not. So it's just understanding the type of trade that we're looking to get into and see if we get some follow through. If we do, we can mitigate risk pretty quickly. We can, if we break beneath these lows, we can probably take at least half of that risk off the table, and then it's only a few pip exposure then at that point. So the US oil is just hanging around this kind of level in here really at the moment. Anywhere within this type of zone where we still want this market to continue lower. We've got these lows in target as well that we'll be looking at sort of around the 71.84 level. So a little bit of a knee-jerk sort of impulsive move lower, but that's what some of these markets are doing at the moment, so that's not overly surprising. Hopefully we get some continuation. So just to elaborate a little bit, we know what we want to happen in this market, and that is for this market to sell off below yesterday's low, which we currently are, and to see some continuation to the downside. So that's what we're trading. We're selling the highs effectively. And now let's see if we get follow through in this oil market, which has been quite bullish very, very recently. But the 72.52 level is quite an important level of resistance. So it's struggling to close above it. And we actually have that in our favor in this trade. So it's you can see we're just kind of in this little sort of range really as we speak. What would be nice for the gold market is if it could actually bounce back to the 1196. That's the kind of the natural sort of support and resistance level. It does seem quite a long way away, although three minutes, made sure this market was moving lower. So we are experiencing just a pullback off these lows. And the dollar is strengthening off a little bit, so, it's weakening a little bit against the euro. We're getting a bit of a bounce in the euro now. So we're seeing the euro pound just break to the downside a little bit. This is exactly what we'd like to see. So we'll continue to just watch these. Obviously, we want to see these prices just flush to the downside in the euro pound and the oil market, and eventually in the gold market. So we'll continue to sort of monitor and see how we get on with these trades currently up on screen. Okay, so we're looking at the way that this price is behaving. So we've sort of gone into a bit of a sideways moving pattern. That's obviously the kind of the first concern, but unless we break above these highs, hi Scott. Yes, when buy-sell spreads get wide, is that volatility like upper right on screen? Yeah, absolutely. That is, I suppose, the reality of kind of volatile markets. So what you often find with brokerages is unless you've got a fixed spread, no matter what the market conditions are, then you can see a bit of, it's called spread widening. Now it's very, very common. It's kind of normal for spreads to widen a little bit during volatile conditions. And the reason for that is obviously the risk for the broker increases as well. So they share that risk with the client, and as a result the spreads just increase slightly because the transactions are more volatile, so there's a lot more transactions and they all need processing. So no, you're absolutely right. You know, and that's why sometimes you need to take into account whether you trade sort of volatile events and news events and things like that, because you know, it is a cost of business, the spread. But I mean, the other thing as well, please don't be fooled by really small tight spreads, because they could be prone to widening a lot more. So pound for pound, most reputable brokerages work out on a level par in terms of spread widening practices, and the way that these brokerages react to volatile conditions can vary quite significantly. So and things like the swap, the overnight rate, and like intraday volatility and that spread widening, and slippage is the other thing I was struggling to think of. Slippage as well is what I suppose brokerages do in order to ultimately protect themselves. Yes, they provide us with a very useful service. We wouldn't be able to trade these markets without that service, but there's other ways in which you can pay to trade these financial markets, and they're not always obvious. This is always something we've had long conversations with many brokerages about, and having a stable brokerage that doesn't sort of get involved in those practices of slippage and spread widening and things like that. Sometimes a little bit of it is inevitable, but all in all, we do. Well, we've currently got a brokerage that we work with, which is Handtech Global, and you know, of course, you can get brokerages with much smaller spreads, but that's only part of the story. There's the spread widening, and there's other reasons in which they can increase that cost until you actually experience it, and you look at things and you say, well, hold on a minute, that's not right because of X, Y, and Z, and I suppose having a brokerage that you can take up these issues with in an open and transparent way is something that the regulators have been looking to improve upon, which is great. So a lot of these regulations that are coming through are designed to protect us as retail traders. So a lot of it is long overdue, and very much welcomed in terms of protecting clients when they trade. So So yeah, great question, Scott. Yeah, spreads can shorten as well, but they can certainly widen. But it's really the extent of that widening is what can be a bit of a concern. So so it's important to just have not just a regulated brokerage, but you know, a lot of these underpin the reasons why we've chosen them as an operator. Just providing, you know, brokerage services that are reasonable, that are, you know, with their clients at the forefront of the services that they offer and the markets that they can access and stuff like that. So it all sort of formulates, it all comes together hopefully a little bit. Yeah, my pleasure, Scott. I'm very sorry, guys. Time seems to be flying. It seems to be going very, very fast. We've actually gone past the top of the hour, so it is time that we will be switching across to the live trade room. For those of you that are interested in, we do offer over 76 different live trade rooms every month. So it's real live trading with complete transparency, as you can see. So if you are interested in joining us, we're currently offering a 14-day free trial. And as you can read below, if you do decide to stay on, there's no significant large fees or anything like that. It's just pure and simply $9.99 per calendar month. So hopefully you find that incredible value and you do come on board and do feel free to join us. So we do have traders over at the live trade room, so we're going to switch across now if that's okay. Apologies for that. We are looking for the gold market to extend lower. We do have a structural failure now at this level, so we're currently in a bit of profit in the euro pound. Not so much, just pretty much moving sideways with a slight bearish sort of aspect to it, but we do expect the gold market to continue lower, the oil market to continue lower, and of course the euro pound hopefully will continue lower as well. So on that note, guys, thank you as always for joining Instagram, Twitter and LinkedIn. All the details are there up on screen for you. So thank you as always for joining us. Do take care. We look forward to seeing you next time. So from everyone here at the Live Trade Room, take care. We'll speak soon. Bye for now. By the way, just before I finish, we've got the FOMC this evening. So major significant event. Perhaps don't hold trades going into that unless you've booked in profit and you're very comfortable with the performance of that trade. So do bear in mind, major news event this evening. And we'll see those of you over at the live trade room very shortly. So for everyone here, take care. Bye for now.